Hey, good morning, everyone. This is Kirk here again from Option Alpha. This is the members only video update. So it's Tuesday, the 15th, halfway through November, expiration week. All of our positions that we have left look very safe, obviously. The markets are down this morning once again, but our positions are well below the market for the next 3 days. So I think everything will be great. We'll have another good month, and we'll just see how December starts to go. We don't have any positions for December yet. I'm kind of in wait and see mode. I think that the markets definitely have some more downside room, and I'll go over that in some of the charts as we continue here on this video. But for the time being, we've had some very good months. We've had some good returns for the market for our portfolios. So there's no point again in rushing anything. We'll definitely try to start entering some trades later on at the end of this week, possibly Thursday or Friday. So be on the lookout for those. But other than that, I think there's some other plays in the market. We talked about the VIX strategy last week, and I just wanted to mention another one that I think might be just kind of up your guys' alley, as always, and that's on the USO. So we'll go over those charts here in a second. But headline this morning, obviously, EU recession coming back right on the front page of the news. So most of the GDP data that from the European Union shows that pretty much stagnant growth, 0.2%, I think was what the median estimate was, and that's what it came back at. So we're right on the brink once again. Italian bonds, Spanish bonds, yields are all driving up higher. Obviously, it's going to be very expensive to mature and roll over that debt, as Greece saw last week, that it was ungodly expensive for them to mature current debt and issue new debt. So it's going to be a recurring cycle here. I don't think that there's any real way to fend this off without entering another recession. That's my personal view. You got to have some I guess you got to have some pain before you can actually see the light. So either taxes have to go up, spending has to be cut. Some people are going to get hurt, but that's just the price we pay now. And let's not delay this down the road and create an even bigger bubble going forward. So if we get to the charts today, like I said, futures this morning are about 1% lower. They've actually rebounded from the deep lows that the S&P futures were at way down here at about 6:30 this morning when I woke up. So they've rebounded quite nicely, but they did break some key support levels overnight, namely the 12,450 level. I'm sorry, 1,245 level on the S&P was broken early this morning at about 4 o'clock. And so we're definitely below that level. Obviously, that'll be a key level today to watch as the markets open up is 1,245 because that's where it's bounced before. And so that's where we could see some resistance. Actually, taking a look at the chart of the S&P, you can see that we've just been bouncing between these two support and resistance ranges for the better part of a month now, just like a pinball, just bouncing right back and forth. I've said a couple times that 1225 is going to be a very hard level to break if we break it on the downside. It's been very strong support in the past, and it's going to be strong resistance in the past, and now it's going to be strong support, and that's just how it works. So if we do break that level, though, we could easily run down to 1125 on the S&P. What's interesting is that if you look at most of the indicators, MACD in particular, you'll see that the indicator actually topped out right before the market started to roll over. And it's not rolled over completely, but it's starting to trade sideways and move lower. But you can see that that indicator topped out, as far as the black signal line here, topped out right at the top and started to roll over. The actual momentum histogram, which is these black bars and these these red bars, actually topped out well before. And you could see that there was declining momentum or bearish divergence in the charts. So as the market was moving higher, as stocks were moving higher, we actually saw declining momentum, which is clearly a bearish signal. Very typical type of a divergent signal you may see on a chart. So we still remain in that downward trending mode. We haven't seen any bullish divergence to any meaningful extent lately. So until we do see that, then I still remain bearish on most of what I think is going to happen in the market. If you take a look at the Russell, for example, the Russell has been slightly moving sideways, and starting to head down to where I think it could gain some support. I think that this area here in blue, around 700, is where it's going to see its first level of support. It doesn't have as well defined support resistance level like the S&P does at 1225, but I think 700 is going to be a good round number support for the Russell. Also, it's going to probably be right around where the 50-day moving average is going to end up being if it gets down there. So look for that area as support if we continue to fall through the rest of this week as well. So the other idea that I had for you guys was USO, and this is a chart of USO, and you can see we've had a dramatic run up in the last 2 months in oil, and pretty staggering actually, and now it's considerably above its 50-day moving average, almost to the point of being well overextended. You can see I've highlighted a couple times in the past where we've had similar types of drops and how fast they've been dropping. Very similar types of drops in USO. But this run up here is pretty reactionary, and it's not going to last longer. You can see it's already started to wane in its strength. Whereas earlier in the cycle, we had big, long white candles, these huge white days where, long, strong volume. Well, as we started to move higher, you can see volume has actually started to decline off. Especially in the last couple days, we've seen a pretty dramatic decline in volume, even though the market's moving higher. So that coupled with a major resistance level right here around 38, overextension looks like a very good opportunity to either one, buy some puts outright and buy some out of the money puts and just take advantage of any fall that might happen, or two, to buy a bear put spread. So that would be to buy, for example, the 37 and then sell the 36 just to reduce your cost overall on the position. So your max gain would be obviously capped, but your overall position wouldn't be as expensive as just buying the puts outright. So again, that's one way to play it. I don't think I would play it with any call spreads right now, just in case the market does continue to move higher. Those will get hit pretty early. But I think that it could be a pretty safe trade to make at least a bet and small wager for a little bit of retracement here in the USO. So that's what I think on the USO as far as technicals are concerned. So hopefully you guys take that and maybe turn that into a good profit. We're not obviously entering it for the portfolio because that's not our strategy for the portfolio. We do credit spreads and naked puts and calls and iron condors. But as always, I'm always going to tell you guys if I see anything in the markets that's worthwhile and worth trading. So, hope you guys enjoyed this video. As always, please email me with any questions or comments, and happy trading.